don't just sort of say, we're going to adopt AI. And in some cases, what we saw, some of our best companies, they started in the efficiency swim lane and they moved to the new product development swim lane second. Some did start on product, but I would say it was more product enhancement than new product.
Hi, I'm Chris Sugden, managing partner at Edison Partners and your host of Electrifying Growth. This is Sit Down with Sugden, where I share from my experiences as both the investor and an operator to help you get that next stage of growth.
Hey everyone, topic of the day, topic of the hour, the minute, etc. is AI. It's everywhere we turn. It's for some of us, we can't get enough of it. For others, it's just too much. It's one of those things where it feels a bit like Groundhog Day, where it's just coming at us. A recent editorial by Ben Sasse, and if you're not following Ben Sasse's journey, former senator, former president of the University of Florida, who's actually dying of cancer, but dying really gracefully. And he's setting quite an example. In his Wall Street Journal op-ed just last weekend, or I guess it was about a month ago now, he talked about AI being both heaven and hell at the same time. Is it going to create great things? Is it going to create awful things? We can also say that about social media, I suppose. We can say that about our phones. We can say that about a lot of things. But AI is clearly creating a tremendous amount of uncertainty, worry, anxiety. I have both college age and high school kids, and it's doing the same for them. It's doing the same for our CEOs. But let's focus on our CEOs, or you, the business owner, entrepreneur, those who are growing businesses. How are we, Edison, advising, or me, Chris Sugden, and board members I know advising our companies? It's less what to do, what not to do. It's more of a think about kind of the bigger picture things, because each business, we used this term recently at our annual meeting, there's a bit of a snowflake aspect to AI. In other words, how it applies to your business. There is not truly a playbook, in my opinion. There are a couple of things that I can give you as best practices, but I don't believe every business should be adopting Claude Code tomorrow because everybody else is doing it. Every business should say it's only this application or this way. It's funny, about a year ago, not even, a lot of bigger companies, some of our in our portfolio as well, had jumped on the Copilot Microsoft bandwagon. And not to diss Microsoft, but a lot of those have now rethought that because Copilot was actually behind where Anthropic and where OpenAI are. And obviously Claude's been the big discussion of the day or of the week or of the month or of the last few months, how great it is, how amazing it is, et cetera. But if we step back and say, this isn't about the app you're using or how you're applying AI to your workforce or your team, and we say, what are the things we're observing about our companies? We actually just had our annual meeting last month. In the annual meeting, we talked about a couple of things. One of the themes I sort of highlighted with one of my partners, Ryan Ziegler, was this idea of the more things change, the more they stay the same. I knew I didn't say it, but it turns out it's some French philosopher, the last name is of Carr, K-A-R-R, in 1848. And he was observing the times. And if you think about what was going on in the mid-1800s, a lot of different technologies and a different time and place, but similarly, change was, every minute, every day. And I actually thought it was a more recent quote when I brought it up in the annual meeting. And to me, it really applies. Edison Partners had just celebrated our 40th anniversary, our 40th annual meeting. And it was particularly apropos of saying the more things change, the more they stay the same as it relates to AI. Because if we go back, Edison being founded in 1986, there is no internet, there is no cloud, there are no SaaS companies, there's no mobile. All these things feel like they happened yesterday, but over the course of 40 years, we had client server technology, go to PC, back now the cloud and the internet, et cetera, all those things I just rattled off. But probably every 3 to 5 years, and in some cases 5 to 10 years, a really big technology advancement comes along. Is AI just another one of those really big things? Is it like the internet? Is it like mobile? In some ways, exactly the same. In other ways, we know it's a whole new ballgame. But I think in each of those cases, when we looked back at how we dealt with investing, how we dealt with thinking about how it's going to impact the business, it goes back to this snowflake concept, and it goes back to how your business is going to implement technology is going to be up to your business. But the one thing you can't do is you can't take put my head in the sand, the ostrich, don't go ostrich on us here. And some people did that a year ago or a year and a half ago, was like, I'm going to wait and see how this plays out. Not the worst decision because how much it's changed. Again, back to my Copilot example, you may have gone with ChatGPT 6 months or 9 months ago, and now Claude's all the rage. One thing that came out of our growth index, which is kind of interesting with respect to kind of just guiding, and that growth index, by the way, is on our website. So you have access to it if you'd like to go download it. A couple of things that were observable. We had sort of 3 categories we have both a growth index and an AI index that we've published the AI index more internally to our portfolio companies, but the growth index is public consumption. And the thing in the growth index that stood out to us was those companies are sort of in some ways slowing down to go fast. It wasn't how am I the first mover to get AI efficiency and be the gold medalist on, I got there first, but who sort of adopted it from top to bottom and were thoughtful about what we were after. Is product going after new product, or is it product enhancements? Is customer service looking to replace their customer service reps, or is it going to make our current customer reps more efficient? We kind of looked at it department by department, and those who kind of ran fast and hard right away ended up having to back up. And you've all seen the study, I believe it was MIT did it a little less than a year ago, that AI investments weren't seeing a return on investment. What we're seeing by these companies that have in some ways said, let's slow down a little bit before we really hit the accelerator on AI, it was, let's assess where we think, is this a cost efficiency opportunity? Is this a new customer opportunity or a new product opportunity and a revenue enhancement? Don't just sort of say, we're going to adopt AI. And in some cases, what we saw, some of our best companies, they started in the efficiency sort of swim lane and they moved to the new product development swim lane second. Some did start on product, but I would say it was more product enhancement than new product. And I'll go back to this sort of what sounds like another cliche in terms of the more things change, the more they stay the same. This idea of slowing down to go fast. You could argue I can vibe code and do things on the fly and come up with a great product, but most of the time, those who have a really solid product spec are going to deliver something that's a little more done, especially in enterprise software, enterprise AI land, where the risk of failure, the risk of not getting it right are higher than in consumer land where we can iterate, let the consumers give us feedback. So take a lot of my comments here today, more around B2B software and AI than the consumer vibe code, throw it out there and let the market give you feedback. Long story short, on what we found in the growth index was it's a top down, the CEO as CAIO, Chief AI Officer. This isn't a technology sit over in the CTO suite and let the CTO tell the company what they should be doing with AI, nor is it just sitting in the CEO with like a dictum. Our companies who had it sort of as a department by department approach with a CEO literally sitting in the discussion, setting the tone, setting the pace, and then letting them as a department go make a decision as opposed to a top down. So when I say CAIO, I don't mean this is the answer for all departments. This is what we're doing from an AI perspective. It's letting each department declare, again, cost savings, efficiency, a retention mechanism for customers, a cross-sell, a new product, et cetera, but sort of defining what we're going after as opposed to saying we're going to, adopt Claude and we'll figure it out later what that return is going to be. Those are the companies that have been performing better. Now, that said as well, the companies that are also performing better have actually adopted an AI strategy. So this is kind of going back over the last year. Maybe it sounds obvious, but it does in some ways contradict the MIT study that there's no return. So those who are sort of still sitting back, or at the end, this is data we took in Q4 and early Q1, Q4 2025 and early Q1 2026. So in the age of AI, you could argue that's a little dated, but it's really not. It's pretty recent. The companies that have had a clear strategy articulated in the way I just said, let's define what we're trying to do with AI, and those who took sort of an approach that was, we're going to set some benchmarks for measurement, and then we're going to check in on the measurement. And if that requires a tactical pause, again, a slowdown to go fast, we'll do that. If we can keep on going because it's working, we're going to do that. They're outperforming those who are sort of taking a wait and see approach. And at the same time, those who got sort of jumped into it right away, let's call it a year ago, a year and a half ago, or 2 years ago, some of those companies had to rethink what they did because there was sort of this, well, go figure it out. They told their workforce, adopt and go crazy. And that's the point about the slow down to go fast. Those who kind of jumped in feet first, you'd think small, innovative companies, they could figure it out. That kind of ties back to the MIT study. The idea of, I'm not getting as much return because I just jumped in and didn't really map out what I was after. Like all things, like throw another cliche at you, manage what you measure. AI needs to be something that's managed and measurable. And again, we're seeing that in our top sort of call it quartile of companies as it relates to this growth index data that we focused on AI adoption and AI effectiveness. Thank you for joining this episode of Electrifying Growth. For more resources, inspiration, and a look inside the Edison Partners network, sign up for our newsletter at www.edisonpartners.com. Click on the Stay in the Know button in the top right corner of our webpage. Thank you again.